Managing Director of the producer buying company, Kojo Atakra, says the main reason why PBC recorded high reduction in profit levels in 2013 is due to its overdependence on external funding. The cost of finance has increased sixfold over the last 5 years by an amount of 52 million Ghana cedis, which acted as interest payments to banks on loans contracted by the company. This development, according to Kojo Atakra, has led to the PBC registering a loss of 8.8 million Ghana cedis. In 2010, PBC spent 4.2 million Ghana cedis of its budget on interest payments to banks. This still holds as PBC in 2011 paid the highest settlements ever of 8.3 million, amounting to about 26% of its revenue. The annual budget report shows that so far, the established funding agreement for cocoa purchases has not supported the company's fund need, thus leaving PBC with no option of acquiring funding than to resort to the banks. This, the managing director admits, wasn't financially prudent.
There has been a steady decline over the last 4 or 5 years, leading to reduction in the profit levels and consequently in dividend payments. The declining trend reached its tipping point in the year 2013, when the company had to bear the increasingly huge finance costs as it embarked on strategies for increased market share in its core business. Unfortunately, the established funding arrangement for cocoa purchases has not been able to exhaustively support the company's fund needs. The company is therefore left with no option than to find solace in the banks. Finance cost has increased sixfold over the last 5 years, recording an unprecedented high of 52 million Ghana cedis in 2013. We paid 52 million Ghana cedis as finance cost to the banks in 2013. In fact, in that year, finance costs siphoned away as much as 46% of gross profit, leaving less than enough to accommodate all the other operational costs. Under such unfriendly business operating conditions, therefore, the company invariably found itself registering a loss of 8.8 million for the year 2013. The company is too much dependent on loaned funds. The entire company's operation is funded through loans, an arrangement that is just not financially prudent.
Aside the over-reliance on external loan funds, the general manager of the Ghana Stock Exchange, K.S. Yamoa, said the PBC depends much on cocoa production for its revenue. He reveals the low revenues accrued by a cocoa board is the major reason for which the PBC is forced to seek extra funding outside.
PBC is a company which is run without control over its revenue. If I say without control over its revenue, is the fact that the margins that is paid to us is not determined by PBC. It's a stakeholder meeting that decides what margin will go to PBC. So we can only increase our revenue based on the quantity of cocoa that is delivered. That margin that is set is based on certain parameters. That we are going to give you this margin, and this is the interest rate of it. That is a loan that will be given you to you will be based on this interest rate. That is how the margin is stated, and its margin is derived from the sharing of what we call the FOB. So as a company, we don't have control over the margin. We only try to operate within the margin that have been set for us. And therefore, we will always want to rely on Cocoa Board funding, because the margin is based on the fact that Cocoa Board will provide a significant funding to the company. And therefore, if you don't get that particular facility, the only means that we have to do is to ensure that we get a significant amount of funding from Cocoa Board. That is the only way that we can survive as a company. But if the margin that is set within the parameters of a specific interest rate from Cocoa Board, we don't get that funding and we go outside at a higher interest rate, that is what is creating the problem for us. So in the event that we don't get that facility, we will not fold our arms. We will still vigorously pursue Cocoa Board to ensure that we get a sizable funding for cocoa purchase, because margins that is earned is based on a certain interest rate.
The registering of losses has become a source of worry to shareholders as they have had to bear the brunt of these drop in figures. Meanwhile, member of the board at PBC intimates all is not lost.
The meeting today to the owners of the company is to just let them know what it is of the just ended season. But that doesn't mean that that is it forever. And that's how we went further to explain to them that our challenge last year, or the just ended season, was as a result of more funds that we had to take from outside against the Cocoa Board funding. And that brought us a dip. If you see from the financial report, you can see that before operating, the gross operating profit before tax was showing something positive. So that means that the cocoa business is good. And it is only the finance cost which cleared off everything. So today we just only wanted to tell them that this is the position we found ourselves in at the just ended season. But it's not lost. These are the other measures we've taken in place to remedy the thing, to still give you hope that we will still bounce back.
PBC is expected to embark on specific operational changes in relation to its funding modalities. Top of these will be a recapitalization exercise, which will see the company engage in much more affordable lending terms. Kojo Atakra says this friendlier lending terms will put an end to the greatest challenge confronting the company. Produce Buying Company is the single largest buyer of cocoa for the Ghanaian domestic market, with a wide coverage on the cocoa buying districts of Ghana. BTA News, Charles Aite.